So this is one of our first interviews that we're hosting with Paddy from Generation Home. So thank you for coming.
Hi, Siobhan, thank you.
So TikTok has been brilliant for us, but we've really navigated the need for helping first-time buyers. And we invited Generation H in the other day to discuss their proposition and how it may best suit or us as brokers understand the product to give more opportunity to people or prospective people who want to buy. So I've got a few questions for you today to really emphasise the importance of your product and how it stands out maybe in the market space. So just go to my questions here for you. Generation H, can you tell us a bit about your product and how you are different to other lenders, please?
Yeah, of course. So great to be here. Thanks for having us. We're a residential mortgage lender. We've got a real keen focus on helping first-time buyers into their first homes. We recognise that one of the sort of biggest challenges for people buying their first home is saving for a deposit, or alternatively being able to borrow enough to buy the home that they want. So we've come up with some innovative products to sort of help solve these problems and help people into their first home.
So when you say innovation, how do you vary from other people? And I'm going off topic here because I'm more like, so how does your proposition vary?
So we got a real keen focus on affordability because we think that's a real place where people struggle in order to borrow enough to buy the home that they want. So we've got a few things. We've recently seen a relaxation in regulation, which means that we can now lend more than most other lenders, which is really nice. We've also come up with our own products like the Income Booster, which enables people to use family support or for support from their friends to help leverage their income from their community to help them borrow more to buy the house that they want.
Now, when we actually have people with BDMs around, I find my learning is best by using a case study. So as this is going out to a brokers community, we all know the FCA's relaxed, so affordability is stretched and the thresholds have come down. What is it about your income boost that makes the difference? How does that work?
It's a great question. So with the Income Boost, we allow up to 6 people to go on a mortgage application and can use all 6
So
incomes.
that's like mum, dad, neighbour, friends. There is no
grandparents.
Does it
Me and you.
Oh, so it can be as loose as anybody to help that person buy.
Indeed.
And up to 6 people.
Correct.
Is it then restricted by age at all? Like when they get to the age of 80, so they can only have a 10-year term? Does that happen with you guys?
It's a great question. Not with us. Now, this is a big traditional problem with what's called joint borrower sole proprietor mortgages. What we recognise is that between the period of time between completion of the mortgage and the eldest borrower's 85th birthday, which is our maximum age for lending, there's been a period of time where the mortgage has been paid off through the monthly repayments. We can then calculate the point at which it becomes affordable to the person who owns the property and then allow them to take the rest of the term on.
So, just so that my brain clicking. So, they get the affordability for the lot.
Yeah.
And then up to the point where basically enough's been paid off the mortgage and that client can afford it in their own entirety, the people then get removed from the mortgage.
Correct. So to give you an example, you can have a first-time buyer who's in their late 20s, early 30s. Their parents, just to use a simple example, their parents would likely be in their late 50s, early 60s.
Yeah.
We say that the maximum age for borrowing is 85, but we still give people the option to have up to a 40-year term, even though their parents are maybe 60 years old, with the knowledge that we can remove them from the mortgage when they hit their 85th birthday.
So you kind of set it out for the time to 85 and then set it up from the...
Yeah. This is really good just because it helps people actually be able to borrow enough. So if you think somebody who's a single applicant on 30k income could borrow about 160,000-ish with us on their own. If they were to add on their parents, or even if they're retired on average pension income of about £18,000, they'd actually be able to borrow about 250,000, meaning that they could expand their property search, borrow enough to buy the home that they want, and also have a term long enough to make their monthly payments affordable.
That's the crucial thing, is when we talk about affordability, it's making those payments affordable. So if there is a big difference between someone's income and what they want to buy, it's then also making sure that they can live to their means within that house. I think it's always crucial. So if you can still have those 40-year terms, it means that person in that house probably can budget better.
Exactly that, and we see it more of as a stepping stone rather than a permanent solution. on average we see people sort of be able to buy the house that they want about 8 years earlier compared to without an income booster, for example, with the knowledge that
And how long on average do people generally stick with their family members? Because you obviously said they come off.
Yeah.
Do they actually come off, or do you see them just remortgage away from you guys? What's their uptake?
Usually the latter.
Yeah.
We recognise we've only been lending for 5 years, so there's been a few that have actually just automatically come off because their parents have now hit 85. More often than not, we're used as a bit of a stepping stone to help people get into homes, and then they remortgage away.
And very similar to the joint borrower sole proprietor, no elevated stamp duty for the people that have the mortgage.
Correct. Yeah. So even if you're a first-time buyer and your parents are first-time buyers as well, if they're not on the title deeds, then they can maintain their first-time buyer status and not have a stamp duty impact.
Nice. So income booster, a very good and helpful way of buying.
Indeed. Yeah.
Awesome. You mentioned earlier as well, deposit. Was it deposits as well?
Deposit booster. Yes.
So that's a different booster.
Correct.
We have 2 boosters.
We have 3 boosters, but
3 boosters.
yes.
So we're on number 2 now.
Number 2. So
second booster. Deposit booster. Tell us more about that.
Booster. So we recognise that saving for a deposit can be a real challenge for a lot of people, especially as house prices continue to increase in price, and the size of deposits needed now are actually really significant. I was looking at some data earlier on, and it's like the average deposit for a first-time buyer in London and the South East is nearly £80,000, which is a lot to save.
You find, right, the statistics really aren't fair for the opportunities that are out there now.
Totally agree with you.
I think they always portray, and I've found a real bugbear about this. Everyone says you can't buy unless you've got massive deposit, but there is so much innovation within the lender's space now. I feel like that I suppose slogan, you can only buy if you've got loads of money, really deters people from even asking the question. So I'm assuming that leads in nicely to tell me about how your deposit booster works.
Totally agree with you. So we can lend up to 95% loan to value as a lender, which means people only need to save a 5% deposit.
Very similar to the rest of the industry that is so far.
Absolutely. The way that we differ is that we say, well, it can be set up as a gift, which is fairly traditional. It can come from family.
As in on the residential market here?
Correct.
So we're talking about family gifts.
Family gifted
Yeah.
deposits. But we recognise that because deposit sizes are increasing, the person providing a gift may want additional security that they might want to get that money back later in the future. So we say, well, actually, instead of signing it away as a gift, you can actually set it up as a loan,
Yeah.
and that's either as an interest-free loan or as an equity loan. And the way that those differ really are, if your deposit equals about £20,000, which could be 5%, that could be set up as an interest-free loan, whereby you put £20,000 in and you get £20,000 back when the property's sold or remortgaged. Or alternatively, it's set up as an equity loan, where that £20,000 might equate to 5%, and then you get 5% back out of the property when the property's sold or remortgaged later down the line.
Okay, fine. Not so too much innovation like that. It's quite similar to what market offers anywhere else. Income booster definitely different.
Yes.
And just on that income booster, I just want to roll back. Do you assess everybody's affordability that goes on that mortgage as well? So if they've got other houses and other kids, you do. Okay. So what's my final booster then, Paddy? Tell me.
So the latest booster that we've launched is what we call New Build Boost. So a few years back, the government removed Help to Buy, removed Help to Buy, and there's been a sort of a slight decrease in number of new build properties that have been purchased and built off the back of that. So we've introduced New Build Boost, which is effectively our private Help to Buy scheme, where people can buy a new build house with a 5% deposit, a 15% equity loan, which is supported by the builders, and then we provide an 80% loan to value mortgage off the back of that as well.
So, obviously being a new build specialist, generally there's some builders more au fait with this than others. What builders are you working with that scheme?
So currently it's very early stages, but we're working with Persimmon and Charles Church as well.
Okay, awesome.
So it's available on all of their sites across.
When did you launch that?
We launched this in March of 2025.
And how many have you had on the uptake on that?
We have now crossed just over 80 applications.
And is it just yourself supporting that, or is another builder, another lender in with that as well?
It's just us.
Okay.
Yeah.
I think for us as a mortgage community, it's really prevalent that you make sure you make times for BDMs, because we are forever having to have a refresh on our criteria, because I think more than ever now, Paddy, and I think you said when you introduced yourself the other week when you came in, you set out to be direct to market, and very quickly you went, oh no, it's us intermediaries that sell your product.
Absolutely.
So now you're intermediary only, aren't you?
Correct, yes. You can only get a Gen H mortgage through Mortgage Lite and other intermediaries as well.
So for yourself, and obviously you can quiz me, what's important when you look to work with broker firms? What makes the relationship work for you best?
I think it comes down to trust, and that's a two-way street, and being actually certain that a lender can execute, but us also work with advisors to ensure that actually we're creating good solutions for clients in order to actually achieve what they set out to do, in this case, helping first-time buyers onto the property ladder.
So, part 2 of our Generation H chat today is to find out about products. So Paddy's very kindly, or actually boastfully, wanted us to talk about 3 different areas that Generation H really stand out on. So, first and foremost, as per point 1, interest only, part and part. How do you guys stand out against other competitors, please?
That's a great question, Siobhan. So traditionally, interest only has been a tool used by the rich. We tend to see it, where people are actually utilising interest only mortgages to reduce their outgoings and actually use that money to reinvest elsewhere with the intention of outgrowing their mortgage and that being a repayment vehicle. This is still true to this day, and we have interest only up to 80% loan to value. And we see actually our first few cases that we've done on interest only, which we launched about 8 weeks ago,
only 8 weeks
only
ago.
8 weeks ago, have attracted very much those types of customers. We've launched it with 80% loan to value, up to age 75, with 50k household income requirement.
So we're only 50k household income, which is different because sometimes you need more. The other thing as brokers we struggle with is the repayment vehicle strategy.
Yeah.
What's your repayment vehicle?
So we're quite happy with sale of mortgage property as a repayment vehicle, up to 60% loan to value, with a minimum equity of 200,000.
Okay. I think if you're new to market, what we can do is show you the other competitors and what they do. So we have, if they're going to downsize, if that geographical area works. So what's lovely is, again, this innovation lenders are doing within spaces. I think more often than not now, we're, as a broker community, having clients worried about monthly costs and how can we keep the monthly costs low. I think for us, because for me, I've only been in the industry 15 years, I've never sold really interest-only mortgages unless it's been in the buy-to-let arena. And this space is something I think I want to get into more. I'm always a little bit worried about the clients because they automatically feel going, but I'm not paying it off. And I think it's really lovely that we've got a repayment culture. But like you said, I've never heard a lender go, what they do instead of paying off their mortgage, they invest in other repayment vehicles, because I've always found people spend to their means. So have you got history, or you found before going into the interest only space, you guys researched what they did with their disposable income?
It's a great question. Interest only for us is actually really born out of trying to solve the affordability problem, predominantly for first time buyers.
As in monthly costs?
Correct, yeah.
Right.
So we realise that people who take interest only mortgages can borrow about 10 to 15% more than they can on traditional repayment mortgages. So we've launched, or will be launching, part and part mortgages, up to 95% loan to value, with the intention of helping more first time buyers onto the property ladder. So the way that we sort of see this helping is that it's a good alternative to shared ownership. It's also a good way to help people keep their monthly payments low and also access the property ladder so they can start building equity rather than just renting.
So when you say part and part, how does that configuration work? 95%, so someone's coming along, got a 5% deposit. Part and part would allude some of it's interest only, some of it's not. So where's the cut off?
So we can have up to 80% on interest only, and then an additional up to 15% on repayment.
Now I'm confused, so I'm a bit of a numpty when it comes to this. So, in my numptiness, 95% LTV, but you said 20% interest only, so 15% has to be on repayment, I'm assuming. That's how it works.
So up to 80% on interest only.
Yeah.
And then the rest on repayment. And that can be flexed. So we'll see some people, because they'll want to meet the minimum equity requirements of £200,000.
So they still need to have 200 grand equity in the house?
At the end of the mortgage term.
End of the mortgage term?
So you could conceivably have a £400,000.
Let's work this out because everyone likes to
Purchase.
see it. So I've got 400 grand house, yeah?
Yeah. You have a 5% deposit, so 20,000.
Yeah.
And then you put 180,000 on repayment.
Yeah. And with the 20k, there's a 200 grand equity.
There's 200 equity,
Now
and then
that is
200,000 on interest only. And that way you've been able to buy a £400,000 house. So we calculate that you can save about 11 to 15% on your monthly payments as a result.
I know, to council tax always high. But yeah, that's brilliant.
So we see it as a really good alternative to things like shared ownership, as a really good alternative to renting, because the thing that we recognise as a lender is that if you're able to get onto the property ladder, even if it's on interest only and people will have concerns about not paying it off, they are still building equity if the house price increases.
I think from us with our TikTok community, don't you think, Van, 5%, generally actually people do come in with 5% deposit, and at 400 grand, that's £20,000. That's not 80. That's not 80.
Exactly that.
And then if you're making it affordable, it just makes it so much more appealing for someone. Because when you move into a house, your council tax is always higher, your gas and electric's are higher, everything just has to readjust, especially if you've gone for... Is this only first time buyers? Is this for anyone? By
It's
the way?
for anybody.
I think we need to do a video on that. Yeah. Okay, so the final point is we've actually got a couple foreign nationals you want me to make a point of. And actually, I want to give you this. So we've done TikTok statistics. So we've had 16,000 people now follow us on TikTok. And Van, who works for me, is an absolute beautiful lady. But aside from that, she is so talented at finding the information on where our audience is coming from. So here, we've actually had 30% of our inquiries come from visa applications. So the foreign community obviously wants to become homeowners. How does Generation H, yeah, I can have that.
That's great.
How does Generation H support the foreign national?
So we lend quite a lot to foreign nationals. They probably make up about 20 to 25% of all of our borrowers.
Yeah.
So people that are here on a visa, we can lend with just a 10% deposit.
So as they've got to be, the rules around visas, so we've got 10% deposit, fine. We've actually got some lenders that do 5, by the way.
There are, yes.
How about visa restriction? How long left in the country, or how long should they be in the country?
So we like to see that they've got at least 2 years UK credit history. So having a bank account for 2 years is great.
Do they have to though? As long as you do a credit check and they're found in the UK, do they need 2 years?
We as a lender can get away with just doing 1 in some scenarios.
We have it here. 1 year, 1 year. And I'm assuming that's to do with footprint in the UK.
It's exactly that.
Yes. Okay, so potentially 1 year in the UK, generally criteria says 2. This is why you use a broker, by the way. Brokers always try and nestle in to see if there's a way of making sure we create opportunities.
And they're very good at it.
You don't ask, you don't get, Paddy. So, what is the other criteria? 10% deposit, potentially 1 or 2 years, time remaining on the visa.
We don't actually require any time left on the visa, and you can be in the UK on any visa that allows you to live and work.
Live and work. Awesome. UK. That's brilliant. 10%, it's got to come from own sources, or can that come from overseas? Can it be builder gifted?
Either is fine. So if you're buying a new build, for example, a new build house, you can have 5% of your own deposit and then 5% incentive from a builder. That would be okay.
Do you do that on apartments or only houses?
Only houses.
Okay.
85 on a flat.
Yeah. Okay. Just saying, if you ever wanted to change that space.
I'll have a word.
Houses and flats. Okay.
Or alternatively, we are a lender that is okay with deposits coming from abroad, as long as there's a good paper trail and the conveyancer can understand where the source of funds is. That's also fine.
I had one the other day, crypto.
Also fine with us.
Yeah.
We sort of see as particularly the sort of new generation of first-time buyers who might have dabbled in crypto when they were a little bit younger, and we've seen some cryptocurrencies really increase in value. That it's not an uncommon source of deposit now for people actually saving their own deposit, and we're okay with it as long as there's a paper trail and we can see where the money's come from.
So, final point for today is contract CIS workers, multiple income streams. So, with the TikTok following, often I have clients 2 jobs, potentially 3 jobs.
Yeah.
So definitely multi-use. And with some of the lenders, they might say plausibility on hours. We will cap it at 40 hours. If it's longer than that, is it same line of work? Or have we got a year's worth of history? So where do you stand on the whole second job?
So we're seeing more and more people take second and third jobs in some instances, simply to adjust to the cost of living crisis. We're quite happy with people having multiple jobs. It's often referred to as second jobs, but it can be, as you say, 3 or 4. That's also fine. We'll use 100% of the income up to the first 60 hours.
Okay, you're 60 hours, that's better than the other place. Yep.
And then anything beyond that, we then start to use 75% of that. So we start to treat it as overtime effectively.
And how long have they got to have been doing the work?
It really depends on what role they're doing and how much they're earning. So if they're earning, if they're doing 2 30-hour jobs, even if they're in different lines of work and they're at sort of equivalent to minimum wage, then we can usually just get comfortable with using it, even if they've only been doing that for 6 months or so. If they've got 2 jobs and they're doing 60 hours, but actually the incomes are quite large, we then start to have a think about, well, how sustainable is it? And also, if things were to change in terms of circumstances and they were to lose one of their jobs or give one of them up, how replaceable is that income? So that's something we try to look at as well. So we assess that more on a case-by-case basis. But if you've got somebody that's working 60 hours on what is equivalent to minimum-ish wage, then we can get comfortable with using all of that with less of a track record.
Amazing. And it says about CIS workers, I'm assuming here you've got a little USP on the CIS?
Yes, that's right. So we treat CIS workers as employed applicants, whereas many will treat them as self-employed. We also just treat them as on a 52-week year rather than a 46-week year as well.
That's unique. We've got some of the competitors at 46 and 48, so 52 is really out there.
Yeah, and how we calculate that is we just average the last 2 months' income that they've had.
2 months?
Yeah.
Not even, I mean, I've got one upstairs right now and I'm looking at NatWest and I'm doing 12 weeks, 12 months worth to try and evidence it where I need it to be.
So we often want to see 12 months experience, but not necessarily doing CIS work. So they could very easily have just started doing CIS work for 2 months, and then we'll average that income, analyse that income.
I suppose what we've got as both community, yes, you've got some unique propositions. How about your appetite for being competitive up there? What's your appetite for this year on growth, or actually maybe be more competitive with the other mainstream lenders?
Yeah, so we've been lending for 5 years now. We lend around 900 million a year in terms of residential mortgages. So that puts us in the top 20 residential lenders in the UK, which is pretty exciting for somebody that's still relatively new to market and sort of helping widen participation for first-time buyers rather than competing with other lenders, really. We'd love to get to about 1.4 billion of lending per year.
Yeah.
That would be a good milestone for us, and I think that's something that we'll probably achieve next year. In terms of pricing, we are not a bank or a building society, so we have to find ways to be innovative because our pricing is linked very much to where we fund our money from rather than savers. So that presents a little bit of a challenge in terms of pricing, but we're only about 0.8 to 1% higher than the high street and making so many more opportunities available for first-time buyers.